So let's see if we get another setup here. We do. Another engulfing right there. Okay, that's 2 to 3 candles up in our favor. I would be booking some small profits from here. You say, gotta follow your rules. Take 25 to 30% off. Let the rest ride. Unless we get big distance from the EMAs. All right, now we're about 5 to 8 candles up. So it's time. It's our second surge. Time to take some second round of profits. Daily cycle is getting really high. Has not crossed down yet, but cycle is getting high. And there we go. It crosses down. We have a nice big bearish candle. 80% of your size is out. Same thing. What is this date? February 23rd. Let's go hop in the 4-hour. Okay. And let's see on the 4-hour if we're going to hold this 8 on the daily, right? Our daily cycle is coming down. We can't, right? Even if this is this and we're going to keep going, we can't really justify putting a lot of our size back in, right? Now we already took off 80%, so 20% of this we're still in, and we'll just trail out with our candle setups. But most of our size we can't put in until our daily's back in a nice position. But we can take setups on the 4-hour if we're going to hold the 8 on the daily. And here we have it. Cycle cross right here, which if we're looking at the daily, that is pretty much this, right? Again, it goes a little below the 8, just like this goes a little below the bands, but we're not, we're not going to see this go below the bands and be like, oh, I'm short. I'm not going to long. It's below the bands. Right? We're not super tight about it like that. Okay. Now you get a setup. Okay, let's see if we can get a few candles in our favor. 1, 2. Yep, there we go. Cycle's getting pretty high. Might make sense to book some profits here. Like earlier, you're coming into a potential old support turned resistance. All right. And then your cycle is nice and high over here. It's your second surge. Time to take some more profits. Your cycle crossed down, and I would be out 80% of whatever you went back in here. Keep in mind, I'm not talking about 80% of your daily trade, right? 80% of your size should only be entered on the cycle crosses on the daily. So if you're going to the 4-hour to try and play some continuation off the 8, you're using much smaller size, maybe 10%. But the same rules apply to your 10%. That, 80% of this 10% should be taken off with the 4-hour cycles you're trading, right? And then just like on your daily, you can trail out the rest with stop losses below your candle setups. Right? And then you get stopped out. That's fine. Totally fine. And then it's back to waiting on your daily to retrace to a preferable position. Right? You guys seeing this, how taking profits can really help you. Even just things like this, right? You're entering here. Your first surge is only 4 to 10%, right? But then when you get pullbacks, that 10% is pretty nice, right? What if you make a 4% play 10 times a year? Just 10 times a year, not even once a month. That's an extra 40%. That's massive, absolutely massive. And that way, if you take off some profits here and here, and price comes back down and hits your stop, that 10% loss is not going to be so bad anymore because you took some profits up here, right? Right. Okay, and here we get the daily cycle cross and the engulfing setup. Okay, that's our next entry, our next higher low. 1, 2, 3. Okay, first 2 to 3 candles after your setup. Take your first wave of profits, 25 to 33% off. Can't speak tonight. Oh my goodness. Okay, take a quarter to a third off there on your first push. All right, maybe we get a slight pullback to the bands. All right, our daily cycle did cross back down on this candle, so that would be 80% of your size back out on the daily. Okay, your entry was here, your stops here, or your exit was here, so not that profitable of a trade, but remember, you took your first wave of profits there, so you might have just gotten a break even, which is totally fine. Okay. All right, let's watch for this daily cycle to cross back up. There it is. We've got another engulfing set up here. Okay, we can put our stop below here. right? Now we're waiting. Okay, we get a couple candles in our favor. Take some profits. Again, anytime I go into old support or old potential support, I'm expecting some slight resistance. Even if it's just a small move like this, that's a chance to add back, right? So here we go. Daily cycle is getting nice and low again. Cross back up. Another chance to add some more in here. Stop below your low. All right, so now we've raised our stops from here to here, to here, to here. Okay. Oh, no, I'm getting the hiccups here. Not while I'm recording, man. Come on. Okay. Sorry, guys. So, excuse me. It's going to be a pain in the butt. Right. We get another cycle cross up here. Big engulfing candle. Now, whether you entered here, 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 whichever, okay, and you get a nice little push like this, 2 to 3 candles up, remember, book some profits. And just think about it. Wherever you entered, whatever your stop is, whenever you get that same reward away, right? If you have a 2% stop, whenever you get 2% above, it might make some sense. Start taking some gains, okay? All right, and then we get our next push, our next surge, coming right into this old lower high here. Let's also mark the top of the move. And let's mark this. That was probably the 786 fib. Let's see, the top of the pump to the bottom of the dump. Yep, right into the 786 fib. Okay, so we'll mark these because these are our resistance levels, right? Your daily cycle is getting pretty high. Whether you're in here, here, or here, this is your second surge. Okay, take some profits into this resistance. Your daily cycle is getting high. Keeping majority of your position on the table until the cycle crosses. Right, we get a BCI here. That's a chance to add more. And specifically for the BCI, we'll have a stop below there just for that addition. Okay, and then immediately after a BCI, we take profits on it. Because here we have 1, 2, 3 candles up, a BCI, 1, 2, 3 candles up. Typically, they're the middle of the move. Right? Makes some sense. You guys remember that from the candle setups video? And now our daily cycle is getting really high too. We're up at 93. That doesn't mean we can't have something like this happen where we just cycle up and up and up and up and up. But we're going to do the same thing. We're going to keep most of our size in and out with the daily cycle, and we'll trade the 4-hour, try and catch the holds of the 8. Okay. All right, so coming into the second resistance here, we get a daily cycle cross and a bearish engulfing below the 8. It's possible that this old resistance becomes support. So maybe we'll go look in the 4-hour, see what we got going on. What's this date? The 27th. But it's also possible we just get a pullback back to the bands, right? And that's why here, 80% of your size gone. And really, you can be selling into this resistance too. All right, but let's go look at, what did I say that date was? 27th of April. March, April, 27th, okay? So I have this breakdown here. You break down right below the band, so already not looking too great, but you do get a cycle cross and a setup. All right, but given this close below the 8, I'm not, right, if this had formed maybe like a wick, maybe it'd look a little better, but you close below the 8. Oh, but there's your wick. Let's see what that looked like on the 4-hour. Right, you have an engulfing setup here, along with the bottoming tail setup with your cycle low. You've closed below the band, so it's possible you complete the move all the way back to pi or the 200. But if you're just using this as a chance to try and catch a trade slightly contrary into your cycle, but in the direction of everything else, right? Not a bad idea here. And then if you get stopped, same as always, you're just waiting for the daily cycle to be in a better position. But here you go, your initial surge. Book some small profits if you're in here. Okay. All right, and then when your cycle crosses, you're out. waiting for the next opportunity. If for some reason the 8 is going to hold here, right, it actually retraced all the way to the 30, but point being, if this is going to be this key high or low, if the daily is not going to get a further dip down, it's going to make another higher low in front of it. So we're okay selling here, and we'll buy the next dip we get, which is right there. Okay, and the stop would be below here. Right, and you just get nuked, which, you know, that's going to happen. All right, so now we'll go back to the daily, waiting for a nice cycle cross. There it is, an engulfing setup. Okay, you got below halfway, you made a cross up. So you can enter there with a stop below, again, either a stop below your setup or a stop below the low. I typically choose the low. And then if you move away from it and break this high, you can raise your stops again. Okay. Let's see what she does. Your daily cycle crosses back down. So it looks like you might just have to exit that one. At least, again, on 80% of your size, you got to exit. The rest, the other 20%, you just trail out with your stop. Okay, and let me see if this was, yep, that was fine. A hold of the support level there. And here we go on the daily. So it turns out the 4-hour dip while your cycle was high on the daily ended up being the low of the move. Now you get a daily cycle cross, right? An engulfing setup, and you can add your 80% size back on. Makes sense? Right near the bands too. Looks great. And you get 2 to 3 candles in your favor. We're coming into, wow, we're coming into this old resistance. I would be booking some gains already. I like this volume though at the start of the move. That's really nice. It's possible this goes further. I know I'm saying this all. Well, I already know what happens, so it's like, but it all applies. All right, it all applies. And so even though I know this is coming, you still take your 25 to 30% on your first surge. That's how you do it. Then you get a few more candles up. You got a topping tail here. Maybe you take another 25 to 30% your second surge. Right, and I would argue this is an example where you get big distance between the EMAs and price, right? This is a 12% drop to the 8 alone. And even the most bullish trends often retrace many times to the 8. So it makes sense to maybe even take half off here on this big push. Okay? Then your cycle crosses down. You're out 80% of your size, keeping the rest with a rising stop loss. Right, here we go, topping tail takeout. We can raise our stop on the rest to here. Watching for the cycle cross, and there it goes. It crosses again. Maybe we sell another small 5% or something, and we're waiting. The rest of it, we can't sell ourselves. We just have to wait. Boom, look at that. Another higher low, raise the stop. Boom, another topping tail takeout, raise the stop. And boom, there you go. That last 15 to 20% was in until the very end of this uptrend here, right? As opposed to just having exited all of it back here with our cycle cross originally. And likewise, these places here, where we're coming close to the 8, we can be using our 4-hour with a small piece of our size. So let's go look at that right at the start of June. Okay. So here's one example. You get an engulfing setup. All right, cycle cross up. Nice chance to buy on the 4-hour, stop below the low. Okay, your first surge, take some profits, cycle cross down. I would be exiting at this point. Okay, then if you get another setup and a cycle low, re-enter. There it is, a setup, bottoming tail plus engulfing, cycle low. Another chance to enter. Okay, your first surge, take some small profits. Was this the end of the move? I'm not sure. This might be the end of the move. Nope, there was one more. All right. And we had, let's see here. 1, 2, 3, 4 buying opportunities when your daily was up here and was not really giving you anything to do. Now, there were topping tail takeouts, and you can buy topping tail takeouts. Those are fine entries with a stop right below the takeout. But it's not something I do that often, especially if the cycle has been this high. Okay. But check this out. Bottoming tail setup, cycle across with a bottoming tail setup, another cycle across with an engulfing setup, and another cycle across with an engulfing setup. So you could still be catching trades on the 4-hour dips, keeping a really tight stop, raising your stop each time. Anytime you get a 4-hour setup, right? BCI here, raise your stop. Your cycles cross down, huge topping tail on your 4-hour. So if you were in these dips, 1, 2, 3 candles, take off a third. 4, 5, 6, 7, 8 candles, take off another third. Right? Your cycle cross down, topping tail set up, take off 80% of your size. And again, if you've taken off some already, you take off however much until you reach 80%. In the last 20%, you're just trailing out with your stop losses, right? With your stop losses. Okay, you get an engulfing there, raise the stop, and it gets nuked. Perfect. Right? Is this making sense? Meanwhile, you did all this while your daily cycle was just going sideways. So you were out most of your position already, and you were just trailing the rest on your daily and also trading the 4-hour, right? That's why we use our lower time frame. It can really help us sometimes. And say it doesn't happen. Say we try to enter and we get stopped out. That's fine. That's totally fine. That's why we want to be using small size on our lower time frame. And now we're just back to waiting for the daily cycle dip. And here we go. Nice cross up. Had a nice little bottoming tail in here. Oops. It's a misclick. I'm trying to avoid these hiccups, guys. Sorry. Nice little bottoming tail setup. Now that our cycle's crossed, we can take any setups. There's the engulfing. Either you use a stop below the engulfing or you use a stop below the higher low, which is what I would do. All right, and then any pullback to this level, I'm happy to long. Here our cycle crosses down right there, right? So you're out 80% of your size, which is probably just a break even for this run. And you're waiting for the next cross up. There it is with that engulfing setup. I said it like 10 times, but same thing. Stop below the setup or stop below pivot lows. It doesn't matter which one you use. It will matter because it'll change how much position size you can use, right? And the stop below the trend low is going to keep you in longer than a stop below just one setup. But you have tighter risk if you're below one setup, so there is that. All right, here we go. Cycle cross back down, another break even probably. And here's the deeper dip that we're really looking for. And a cross up there. That's another chance to enter. Stop below the low. And you get nuked right away. And that's fine. That's totally fine. Okay, here we've closed below the bands on the daily now, and we've made a lower low. So it looks like we're going to come all the way back to the 200 and or pi. Now, it may not happen, right? But we're going to see. And so now that our bands are kind of coming down, we're going to be a little more cautious about buying a dip until we can start making a higher high again. And here we go. Our bands are back in an uptrend. Okay. Now we can go back to buying dips. Right? So excuse me. Let me make this a little more clear. You break down here. You immediately find liquidity to here, and you make a lower high along with another lower high. But then you make higher lows, and you make higher highs relative to here. So you're back in this uptrend. Okay, you get a daily cycle dip, an engulfing setup. That's a buy. And you can either do a stop below the setup or a stop below the trend low. It's up to you. All right, your first surge, take some profits off. I know it's only a few bucks, but it's the consistency that matters. Your cycle crosses down, okay? Going to take off 80% of your size. What does this state? And it looks like it goes up further again. And this is a scenario, another scenario where, right, trading this is great, but it'd be nice to be able to trade all of this, which is why we use the 4 hour. And it's also why we don't trade 100% of our size with our cycle crosses, just 80%. So the last 20% we're trailing with these higher lows until the trend breaks down. And that'll keep us in all the way, right? And then, of course, until we get daily cycle dips again, and we can add more size. All right, has this all been making sense, guys? If it's not, shoot me a message in the chat. I'm happy to clarify anything whatsoever. But it's been going on for a while here on Bitcoin, so I think I'll switch over to Ripple, and I'll try to make this one a little quicker, just because we've probably gone into like an hour here. All right, so here we've got XRP, same timing as Bitcoin back. Actually, no, that's not true. We were talking about Bitcoin. Oh my goodness, I keep clicking the wrong tools. We were talking about Bitcoin in 2015, 2016. Now we're talking about Ripple in 2017. Okay, but it's the same kind of concepts, right? We looked at Bitcoin after it stopped making lower highs and it made higher lows and higher highs. We're doing the same thing on Ripple, right? You were making, I keep clicking the pitchfork, darn it. You're making lower lows, lower highs, lower highs. And now you're putting in some higher lows. And then over here, you put in a higher high. Okay? So now maybe, kind of like we did with the Bitcoin breakout, maybe right when you break out, you know your cycle's high, so it's likely you get a pullback. But because of this strength, and you don't want to be FOMOing, maybe you just buy 5% here. Just a small piece, just something to keep you satisfied. So if it goes straight up, you're happy you made something. And then you're waiting for the daily and the 4 hour dips to buy more. Okay? So here you do not really get a proper daily cycle dip until right here, and you get one. Okay, we've got a small little baby engulfing setup. Now, again, I've said it so many times. Stop below the candle setup or stop below the low of the move. All right, price went all the way up, and then immediately you retraced to this low. So either you're keeping your stop below the candle setup or below the low of the move. I use the low of the move most often. Right, our daily cycles cross back up. We're back in this. Ideally, we'd like a full pullback to here, but we just might not get it. Or maybe we do. Nope, no we don't. So we get a bottoming tail setup plus engulfing. Another cycle cross up. On the daily. Okay, your first surge. I'll be taking, on these first 2 to 3 candles, taking 25 to 33% off. And on the next 3 to 4, take another 25 to 33% off. And then the daily cycle here, wait till it crosses down, which it does right here. And we'll take off, we'll make sure 80% of our size has been taken off. The rest of it, we're going to trail out with higher lows. Okay, this is a higher low here. Make a higher low here. This is also a really good dip. A nice bottoming tail plus an engulfing. The stop below the low. Looks really good. All right. Oh, I'm sorry. I was moving a little too fast there. Stop below the low. Your cycle crosses down. Looks like you're taking not a small loss, but just a small win. All right. The entry was here. Oh, wow. That's not small. This chart's just so distorted by how insane everything is. Maybe I'll stop using log. Wow. I got to make sure I don't make that mistake again. Yeah, here. Nice 20% gain. Cycle crosses. You're exiting most of your size. But still, you still have that same 20% that you're just raising with higher lows. All right. You get another daily cycle cross up. Not really any kind of setup, but you do get the daily cycle cross. There's your engulfing. We can raise our stop on our 20%, and we can enter 80% of our size again. All right, first 2 to 3 candles, take off a quarter. Okay, cycle cross down right here, and you're back out. Okay. All right, we're waiting for this. This is that nice deep dip. This is what we like to see but we're not getting any candle setup. It looks like, too, your 20% core piece would have been stopped out. So maybe this is the end of the move temporarily. Yep. Oh, yeah. Right? And here, same thing as we saw earlier. Price is making now lower lows, right, comparatively to this one, and lower highs until this. Now we've got higher lows and higher highs again. We're still trending above pi. We can go back to buying daily cycle dips. Okay, here we've got a nice setup off the 200, coming right into this old support zone, reaching all the way back to here, right? You guys see that? Okay, so we'd like to hold this, and then, right, we made lower highs here, and then we made a higher high relative to those, but we made a lower high relative to these. So now we've got to be a little careful, and this would be a good time to look at a weekly if I had one pulled up. All right, 2 to 3 candles in your favor, take some profits. All right, another couple candles in your favor. I would take another quarter off. Your cycle is getting really high. And there it crosses down. That's 80% of your size off, and you're coming right into this potential lower high, right? And what do you know? We get a dip right from that area too. Check this out. Price retraces right to this 618. We get a bullish engulfing with the cycle cross. We don't get any follow through after. Ooh, you might get stop run there. Perhaps you get stop run. Okay, and you can always, I usually give myself 2 chances. If I get stop run and then I get a setup right after, I'll usually re-enter. And then if I get stopped twice, I'll take my L. And I'll just reevaluate. Okay, maybe you get stopped out here with your stop a little low. You re-enter up here. New stop. All right. Take some profits if you get a big wick like that, guys. Because you never know when a wick like this is going to become one like this, where it's really pivotal, right? So this could be really pivotal. Apparently not quite as pivotal. Get your daily cycle high, crosses back down. I'd be exiting. This is kind of sideways right now, okay? You're kind of in this sideways, so trading is just a little bit weaker until you break this range, which good old XRP sure did it there. All right, you get the daily cycle cross right here. There's your engulfing setup after the cycle cross. Okay, you're still just raising your stop on your last 20%. Right? Or sorry, I might have misspoke there. Your last 20% actually got stopped out over here. But when you re-entered on these dips, okay, 20% of it you're going to keep, like we've been talking about, and just raise your stop with the lower or the higher lows. And then 80% you'll be taking off with your cycles, okay? All right, initial surge, 2 to 3 candles, huge moves. Made a new high actually, but I'd still be taking some profits. A lot of people buy in the new highs. I like to take profits in the new highs. Makes the most sense to me. Right? You get huge distance between the moving average. Moving average here, the 8 is at 40 cents and price is at 90. So that's one of those situations where you sell 50 to 75% and you don't look back. Right? And then your last piece, you'll just raise. If you get a higher low here and you keep going, great. Right? Absolutely great. And that's what it does. So that last 20, 25%, you just keep the stop below your higher lows. Okay. Boom. Another one. Absolutely insane. Oh, wait. Is this? Oh, we're almost caught up to present day. Crazy. Yeah. Oh, yeah. And at this point, right, you haven't really gotten, there's been no good daily cycle dip since here. So you haven't really had a good chance to enter. Right. But this last piece, you're just constantly raising your stop on the daily, and then you get stopped out here. All right, now one more time, just like we did on Bitcoin, let's go look and see, like, look how much, again, this was a great trade, right? You took off most of your size up 100 to 200%. That's fantastic. In the last bit, you got stopped out at 600%. So that's fantastic, absolutely fantastic. But let's see if we couldn't use the 4 hour. Remember, we stopped out 80% of our size here. Let's see if we can't use like 10% of that and see if we can catch some of these dips, okay? So this will be from December 14th to January 14th. So about a month. Let's go check it out. All right. So at this point here in December, we bought the daily cycle low here, and the daily cycle topped out around here. Price made huge moves away. Makes sense to book some profits. And now our daily cycle is high, so we can't really add size until we get a proper dip, but we can be playing this 4 hours in case the 8 holds on the daily, which we saw it did many times. And like I said, this will often happen in a really strong bull trend, like we saw Bitcoin did it. We've seen tons of altcoins do it. Ethereum does it all the time. And the same thing goes in a bear market. The exact opposite's true, right? Price will stay below the 8, which we see here, right? Price does not get back above this 8 for long at all, right? Okay, so we're going to want to try and catch these dips to the 8, even though we can't catch them on the daily. Maybe we can catch them with smaller size on the 4 hour, right? And check it out. We totally can, right? We get a cycle cross up, engulfing plus bottoming tail setup right into the low, right? First 2 or 3 candles, take some profits. All right, and then 5 to 8 candles plus your cycle cross there, you're out. Hop back in if you get a setup with the cycle cross. Boom. There it is. Stop below the low. Now this is a pretty big stop, so it's likely you would not have been able to enter very much at all there, but something's better than nothing, right? Right, and your cycle gets high. You have a nice big wick. Take some gains for sure. See if we can get another 4 hour cycle dip to buy some more. We do, but once again, it looks like we're going to have a really far stop, which probably means we can't enter that much, but you know, it's something while we're just trailing the rest of our daily profits out. Right? Here we're getting a little bit better, a deeper 4 hour pullback, and that's nice. And here we have your next best setup after your cycle cross. You get an engulfing setup, stop below the low. This time the stop's not too far. I keep clicking this. Sorry about that, guys. This time your stop's it's still pretty far. The 20% is pretty big. So you still can't enter much on these dips, but you're not trying to enter big size. You would be entering no size if you're just using the daily. So, you know, any adding and reducing is good. Another engulfing here, but your cycle is high on the 4 hour too, so you can't really do anything with that. If you want to, you know, that's up to you to take that risk. You do have an engulfing setup, but that's all you've got, right? And in this case, in 2018, it would have worked out all right, right? Doesn't mean but here's the thing. Bad setups taken can still work out. And you can take good setups and they don't work out. That's all part of trading. But we want to focus on taking good setups. So if we don't want to be entering trades when our 4 hour and our daily cycle is high. It's just, we're only on the 4 hour because our daily cycle is high and we can't trade it as properly. So we don't want to go into the 4 hour and then buy something when the cycle is high on the 4 hour too. Even if it made money, it's, you know, the risk reward's just not there. Okay. So I think that was the last. Maybe there was one more dip. We do have a dip here on the 4 hour, but we don't really get an engulfing setup. You get one there. You can enter there. We'll stop a little low. Right, you just have to keep really tight stops because at this point, your daily is so far extended that eventually this big crash is just going to come. The further you go and the faster you go up, the further and faster you come back down. That's just how it goes, market cycles. All right, so you're coming into your old high. Cycle's getting high. Book some gains, absolutely. Right, and then your cycle crosses down. You get a bearish engulfing back below the 8. Back, exit out, and you're waiting for the next cycle dip. There it is. I don't think I see a setup. Maybe that's a small engulfing with a stop below the low. I guess that makes some sense. Yeah, take some small gains on your first surge. And that's why you do it, because you get I mean, technically, you could have gotten out with the cycle cross here, but, if you didn't, your stop gets nuked. All right. And then your core piece gets stopped out too. All right. Sorry if that was confusing. Again, reach out to me. I'm here at your service at all times, pretty much. So please feel free to. But I'm just trying to show that you can make money on the daily, keep a small piece when you exit on your daily, and then use a small piece on your lower time frame to catch dips that you really wouldn't be able to catch on the daily alone. You guys seen how I was doing that? I hope so. Okay. That's going to wrap it up for this one, guys. This has been a long video. If you guys have any questions, feel free to hit me up in the channel. I'll catch you guys in the next one. Peace.